Mergers and acquisitions in the Asia-Pacific climbing to a 4-year high, but the fees paid to bankers are down as prudence prevails despite improving confidence. CNA's Olivia Marzuki explains.
Asia's deal makers are back in business. Across Asia-Pacific, excluding Japan, mergers and acquisitions had the strongest first half in 4 years. But while companies are making more deals, investment banking fees across the region still fell. At first glance, that appears to be a contradiction. But as one LSEG analyst explains, it has to do with the size of the deals.
Asia-Pacific mega deals has declined 11%. So when we say mega deals, these are the deals that are 5 billion and up. And as we know, these large transactions are typically the ones that generate larger fee pools, right? And then the other would be, we are seeing smaller deals dominate. Transactions below 1 billion are also leading the recovery, but then substantially their advisory fees are lower than the mega deals.
There's another reason. Investment banking fees are only recognized when the deals are completed. Now, many of the transactions announced this year have yet to close. That makes fees a lagging indicator of activity. But beyond the numbers, the bigger story is about confidence.
I would describe it as measured confidence rather than, full-on confidence. Companies are clearly more willing to pursue acquisitions than they were a year ago. So which tells us that confidence is improving. But of course, boards are still navigating economic and geopolitical uncertainty. So they're being very careful about how they deploy capital. Companies are still wanting to strengthen their technological capabilities, expand into new markets, and really drive growth. But they're doing so in targeted acquisitions rather than large transformational bets.
Now, that pattern of confidence is shaping where the deals are taking place. M&A activities rose sharply in Singapore, Malaysia, and Indonesia. But the Philippines bucked that trend with a steep decline. Now, Singapore also illustrates where investors are placing their bets. One major contributor was GIC's participation in Anthropic's $30 billion funding round, the largest Asia-Pacific deal so far this year. Technology accounted for more than half of Singapore's deal value. But the investment story does not stop there.
We have to think about also all the adjacent industries that are driven by AI transformation. So it could be semiconductor, it could be real estate. We're seeing a lot of data center deals in Singapore. It's not just high tech, but definitely all the adjacent sectors that are driving activity.
In other words, investors are not just backing AI companies. They are backing everything AI needs, from semiconductors to data centers to digital infrastructure and even real estate. For now, Asia's deal-making recovery is being driven less by broad optimism and more by targeted acquisitions. Olivia Marzuki, CNA, Singapore.